Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, May the 12th, 2010. Well, a continuation of the trend in the first time frame, and the market's looking fairly strong. The market made a higher high and higher low, which indicates that the market is trending up in the first time frame. The market's also trending up in the second time frame, and we can see from the series of higher peaks and higher troughs that we have quite a strong uptrend in the medium-term time frame. Now, just looking at the size of the body of the candle, it is slightly smaller than the previous candle's body, and that does raise a little bit of doubt about the viability of the trend in this time frame, or for the potential for the market to maintain the strong upside momentum that it has. Basically, that the green body tells us that the buyers have made some solid net bullish progress on the day between the open and the close, but it wasn't as solid as the previous day. So that may be a slight concern for this market, not a great concern though. If we look at the range of the candle too, though, that's reduced. The range is the distance between the high and the low, and compare that to the previous range, and that's reduced, and that's telling us that the buyers aren't as eager as they were previously. Having said that though, in regard to both the range and the size of the body, if we look at the previous candle, it really was quite an extreme candle. So it's little wonder that it's both of those measures aren't as large as the previous, because it is very difficult to maintain at such a high intensity, for the bulls to maintain that high intensity for a long period of time. But having said that though, there is still a slight chance that the market may relax just a bit. So considering that, we do need to watch the low of the current candle for a potential lower high and lower low. Now, the market is trading up above the cloud or the Kumo, so the market does have an overall positive bias in the long-term time frame, and the market is traveling quite a fair way up above the Kumo, the cloud now. So the market is starting to look a little bit overextended in that regard. Also, it's quite a fair way up above the Kijun-sen and Tenkan-sen, so looking a little bit overextended there too. And the fact that it's above both of those indicators tells us that the market is bullish in both the medium-term and fast-term timeframes, and both of those indicators are pointing up fairly sharply, reflecting the very strong upside momentum that the market has. Now, those indicators too are just starting to look a little bit overextended too. So there is potential for the market to come back, perhaps over the next few days. Now, if the market does come off, then this 1227 area will offer itself as a potential area of support, and we can see on the current candle that the market tried to trade off to that level and found support there, and it is the previous major high that the market made some time ago. So there is potential for that to offer support once again, and we had minor support there in the current candle, as evidenced by the shadow on the bottom of the candle, and that represented buying coming in. If the market does come off past there, and we would want to see a bearish close down below there, then the Tenkan-sen will offer as potential support. When the market's trending up quite strongly and that Tenkan-sen is pointing up sharply, that will be the first area that the market will find that support. And we do need to read the short-term dynamics when the market trades around there for a potential for the bulls to come back in and trade the market back up to test the swing high up around here. If that fails, then the Kijun-sen offers solid support. There are some minor swing lows on the way down, and they offer support, and then certainly down to the cloud. So there is strong potential for support all the way down through here. Blue sky up above, so there's nothing holding this market back at the moment except the fact that it may start to look a little bit overextended. And we know that with regard to our Ichimoku charts, markets will move like rubber bands. They'll move from equilibrium to disequilibrium. This market is beginning to move into a very strong level of disequilibrium, and quite often when that happens, they will bounce back like the rubber band towards equilibrium, as represented by the Ichimoku indicators. So we do need to watch the lows of the current candle for potential lower highs and lower lows.